Hey, are you a business owner, entrepreneur, or professional? If so, we want you to apply to be a featured guest on our show. My name is Adam Torres, and I host the Mission Matters series of podcasts. I've recorded over 3,000 episodes, and we are just getting started. How do you know if you'd be a good guest to be on the show? Well, only one way to find out, and that's to apply, but I'm going to let you in on a little secret. We want guests that have a story to tell, guests with a brand, a product, or a service that can benefit my audience of listeners. If this sounds like you, go to missionmatters.com and click on Be Our Guest to apply. I'd love to talk to you and get to know more about your story. Again, head on over to missionmatters.com and click on Be Our Guest to apply. All right, now let's get into the show. Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to Apply. All right, today I have Sarry Ibrahim on the line, and he's founder over at Financial Asset Protection. Sarry, welcome to the show.
Hey, Adam. Thanks for having me on. I appreciate it.
All right, so I'm excited to get into today's topic. So we're going to talk about the bank on yourself concept, and I know some of the people may not be familiar with it that are listening to this, so I'm excited to get into this. But before we do, let's go a little bit further into what you're doing over at Financial Asset Protection. Tell us a little bit more about your company, please.
Yeah, definitely. So we are a financial services firm. We help real estate investors, business owners, full-time employees grow, save predictable wealth on a tax-favored basis. We mostly specialize in what's known as the infinite banking concept or the bank on yourself concept. That's our primary niche. And again, we're very targeted towards real estate investors as well as business owners, but that's pretty much what we do. We structure the infinite banking policies, or also known as the bank on yourself policies, for them to manage within their business and to kind of integrate with their business.
That's awesome, Sarry, and I think that's a great transition too. So let's just go further down that line of the bank on yourself concept. So first, maybe tell us a little bit more about how it works.
Yeah, definitely. So the bank on yourself concept, it's the utilization of dividend-paying whole life insurance, mainly for the cash use rather than the life insurance part. And what that means, Adam, is that whole life insurance has two functions or two purposes. One is the actual life insurance part, just like in the title, and the second is the cash value part. The cash value part of a whole life policy is structured properly, and if structured the bank on yourself way, which is a special method, then you could do a lot of things with that cash value that you can't do with other investments or other places that you store your cash. In other words, there's more benefits to the utilization of cash value whole life insurance, the bank on yourself way, than other traditional investments. And I could definitely jump into more of that if you'd like.
So what are the, just to give people a feel for this, because this may be new, what are some of is this appropriate for like retirement typically? Is this appropriate for like shorter term goals? Like maybe just kind of start with time horizon of what types of people that maybe this has worked for. And again, I know everybody's going to be different backgrounds, different, things that they can put aside for retirement. But just to give you, a general overview would be helpful.
Yeah, of course, yes. So pretty much what we do with our clients is we do like a full financial analysis. This is like the diagnosis phase. This is where we kind of figure out where the client's currently at, what they want to accomplish, and then we build a solution based on that. I've worked on solutions for people as young as 18, 19 years old, and I've also done solutions for people that are 70 years old and they're just rolling over like an IRA or rolling over with an investment account. So it all comes down to that financial analysis. To give you like a more specific example, I'm working on a case for somebody who's 19. He's going to allocate $300 a month into the policy. He's going to build it up over time. He wants to get into the habit of saving for the future and build up for the future. And I've also worked on another case for a guy who is 70 years old. He's a real estate investor. He sold one of his properties for $400,000 in cash. He wanted to park that money somewhere that would earn him compound interest, but not be exposed to any market risk. So he decided to do a single premium whole life insurance policy. So it's still the same bank on yourself policy. It's just a one-time transaction, a one-time payment of $400,000, and then he instantly had cash value and life insurance, of course. And both of those, the life insurance amount and the cash value, grow every single year. So it's kind of the where we're at. We can do pretty much any amounts for any age. It just all comes down to that financial analysis and understanding where the client's at and where they want to go.
Man, that's awesome. It's a great concept. And can you talk about a little bit more about that idea of guarantee? Because I think that's a big difference between a product like this and maybe some other types of investments. And it's not saying that one's better than the other, at least from my end. It's just saying that people need to know that they at least have options there, because not everybody knows they have the options.
I agree. Yeah, it's not either or. It's not, do this over that. There's, there are options out there. And with the bank on yourself concept, again, it's talking about whole life insurance. And we only work with whole mutual insurance companies that have been paying dividends to the policy owners for over 160 years. So that's their track record. These companies that we work with have been around for over 160 years. And the way that insurance companies are regulated works different from other places than financial institutions and banks. Insurance companies are not allowed to invest in the stock market or invest in speculative investments. They have to. Usually it's about 60 to 80% in the bond market and then 20 to 40% in private loans and real estate transactions. So they have to stay on the safer side and more of the guaranteed side. And there's also a contract too that when you enroll into the policy and you become a policy owner, the insurance company in writing is saying that we guarantee you, by law, we're going to guarantee you X amount of interest over the next 20 or 30 years, however long you have the policy with them, and then plus dividends. Although dividends are not guaranteed, we only work with insurance companies who have been paid dividends for over 160 years, including through the Great Depression, through the 2008 market crash, and through today with the uncertainties of the pandemic. They're still paying dividends. So, and it's because they're not correlated or affected with the stock market.
Man, I love it. It's a great concept, and one of the things I do like too is when you think about when somebody's creating their full, financial picture, and they're thinking about, okay, they might have a 401k, they might have some stock exposure, they might have some bond exposure, they might have some real estate exposure. Why not have some guaranteed exposure, right? or I shouldn't say exposure, but a guaranteed a slice of the pie. That's what I should say. A guaranteed slice of the pie. Like it all works together.
Mm-hmm. Exactly. Yeah. It's not something meant to replace what you're doing. You just kind of like imagine you have, your real estate investments, you have your cash flow, you might be a W-2 employee, you have these different sources of income. I think it's highly recommended to take this whole life policy, this bank on yourself policy, and kind of put it in the middle of everything you're doing. So you're not necessarily taking one out, but you're just putting it in the middle, and you're able to kind of take money from one hand, and instead of passing it to the next hand and into expenses, income and into expenses, you can kind of park it in the middle somewhere that'll grow, and you can borrow from it, and it still grows even when you borrow against it. So you're able to grip your money in between earning it and spending it.
So I know we've been talking about, the income side of things, but I think we should at least mention the insurance side of things, the whole life side of things, and like unfortunately if somebody does pass away, like how that works, just because I don't want to assume that everybody listening knows.
Yeah, absolutely. Yeah. So again, the whole life policy has two functions. It has the cash value, and then it has the actual life insurance part. So when you buy a policy or you own a policy, you have the cash value, and then you have the death benefit or the life insurance part. And the life insurance part is usually much higher than you're putting in. It's a much higher multiple than what you're putting in, because obviously that's just the risk the insurance company takes on. And if somebody does pass away in the middle of their policy, of their policy being active, their beneficiary, whoever they list, either a spouse or kids or anybody in the family, they would get a income tax-free death benefit, and then they could use that obviously for whatever they want for the next generation, to buy their business, to keep their family business still in business. There's a lot of things they could use it for, a lot of different estate planning functions, but that's pretty much how the life insurance part of it works, is that it's a tax-free death benefit to the next generation.
No, that's great. And what I see this as too is for especially for people that haven't necessarily planned for that, and they know they need to, or they have kids, or just for whatever reason they haven't gotten around to it. I mean, they kind of can get, kill two birds with one stone, so to speak, with going this option, because they're covering both, really.
Yeah, exactly. You could do both. You could cover, your short-term investments and your liquidity, the liquidity need, and also have the life insurance in the background. It's still there. And then eventually the life insurance, over the years of earning compound interest in your policy, eventually the life insurance will pay for itself. So you have the death benefit and you have all the cash value, because you're essentially, the insurance companies use your premium dollars to invest, again, in the bond market and real estate, and they're earning profits from that. They're depositing that back into the cash value. Eventually, over time, you'll be able to recoup the cost of insurance and the liquidity needs.
That's awesome. So, Sarry, if somebody's listening to this and they want more information or they want to connect with you and your team over at Financial Asset Protection, I mean, what's the best way for them to reach out and to get that info?
Yeah, they can go to finassetprotection.com. It's FIN, assetprotection.com. And there's a link. You can schedule a free virtual appointment. All our appointments are virtual, so you can schedule an appointment there. And as a special Adam, for your listeners, if they reach out and they say they came from your show, I will send them a free copy of the Bank on Yourself Revolution book. It's like $15 on Amazon, but if you reach out for a consultation and you say you came from Adam's show, I will send you the book via Kindle for free.
Man, that's awesome.
Yeah.
That's awesome, and I love getting my audience information and books. So thank you for that. And let's have you leave the website one more time, because I feel like possibly some people were doing some things, they were getting a pen, they weren't ready yet, and I want to make sure they go visit.
Yeah, it's FIN, FIN, assetprotection.com.
Perfect. Well, Sarry, really appreciate you coming on the show today and sharing more about your background and all the great work that you're doing to help your clients. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave a review on the Apple iTunes Store. And if you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave us some comments in the video. Love to know what kind of projects and things that you're working on. And Sarry, thanks again for coming on the show.
Thanks, Adam. Thanks for having me on.